What do you think then is behind this early 2022 crash?
I think that there's a lot of dynamics here. If you look at the entire crypto ecosystem, you have a set of regulatory uncertainty, especially regulatory uncertainty around stable coins and crypto tokens and whether or not they're securities. And that creates a little bit of anxiety. You have a lot of leverage offshore, right? You have a lot of crypto exchanges that can trade with up to 20x leverage. And those crypto exchanges have many, many tokens that are cross-collateralized. And between them and the DeFi exchanges, you can get much higher than 20x leverage. So that's a second source of volatility. The crypto markets are almost designed to encourage volatility. And that creates kind of a love-hate relationship between the crypto ecosystem and the Bitcoin hodlers. The Bitcoin hodlers are holding for, a decade, and sometimes for 100 years and sometimes for 1,000 years. And yet you've got fast money hedge funds that have a tax incentive, a huge amount of leverage, and massive volatility. But you have two totally different investment mentalities here. And when they come together, the result is you've got, in my opinion, the world's least risky asset to hold over the next century called Bitcoin. And you've got the world's most volatile, fast money market, called crypto. And they're both joined at the hip, for better or for worse, in the year 2022.
So clearly you're a hodler. But for the people who are terrified, who have never been on this roller coaster before, shorter term, what does the trajectory of Bitcoin look like to you this year?
I feel like it's consolidating at this level. This is a great entry point for institutional investors. I talk to high net worth individuals, family offices, public company executives, private company owners, and they watch Bitcoin run up in 2021. And there are a lot of people that would be afraid to own it if it was going up 400% a year. But if they're staring at it and it's 40% off the all-time high and it's consolidating, and they see that it's being embraced by people like Bill Miller, by very well-respected investors, it's being embraced by the regulators, it's being embraced by senators and congressmen and public investors and public companies. They're looking at this as like a good entry point. I'd be remiss, Emily, not to make a more important point, which is what's really going on here at a macro level is inflation. The CPI headline inflation is 7%. Look at the Turkish lira. It's collapsing. The peso is collapsing. So there's a volatility story for a conventional investor in Manhattan that's got a portfolio of equities. But 75% of the world can't buy the S&P index. They're in Africa, Asia, South America, and if they've got their assets in banks, they're going to have them seized. They can't buy the equity. So the real story here is digital property that solves a problem that 8 billion people face.
The big question is then, are you going to buy more? Yes or no?
Yeah, we're going to buy more. We're buying more with our cash flows. We've adopted a Bitcoin standard, Emily. That means that when we generate cash, we sweep it into Bitcoin. We've been generating, anywhere from $70 to $100 million of cash flow. So we will also buy Bitcoin with debt. We bought Bitcoin with $1.7 billion worth of convertible debt. We bought Bitcoin with a $500 million senior secured note that we pay 6 1/8% interest on. We also issued $1 billion worth of equity at the market, and we converted it all into Bitcoin. So combinations of cash flow, equity, debt, potentially through other partnerships.